SmartX is the first DEX with a real solution to impermanent loss. SmartX is transforming the DeFi landscape, catering to liquidity providers and smart traders who want to benefit from low fees, farm DeFi highest APRs, and trade effortlessly on SmartX.io.
Good afternoon, everyone. BC Ridgefield here, coming to you live from London. It's just gone a couple of minutes past midday, making it just gone 1100 UTC. Great to see so many of you on the stream already. Really sorry I wasn't here on Monday. Full transparency, Stag Do was immense. It was 3 days of just absolute carnage. And yeah, Monday just spilled over. I was trying to come back in for half a day, but yeah, I still hadn't made it back from the campsite that we were on. So I didn't want to lie to you guys. You know, I like being honest, but it was a brilliant but heavy one, and we had a great time. But I did really miss you all. So good morning, Hans, my friend. I saw you in the chat there, nice and early, looking at gold. Can have a little look on that one as well. Our wonderful Kelly Barker, all the way from New Zealand. How are you doing, Kelly? I hope you're well. Wonderful Nip Par is here as well. Look at that. Lovely Erica. GOT, my man. How are you doing, buddy? Whack as well. Craigie boy sneaking out on his lunch break as always. Burn. Great to see you on here, Burn. Mert, good to see you back as well, my friend. Really pleased to see some new faces. Obviously, all you wonderful, I don't want to say old faces, especially at my age. You can't start being ageist. Everybody in this industry seems to be younger than me. But how wonderful. Knit, still pickled. No, do you know what? I feel a lot better today, actually. Although, you realise that as you head out of your teens into your 20s, there's not really that much of a transition. Your 20s into your 30s start to slow up a little bit. 30s approaching 40s, I realised that basically you stop. I used to be like a rubber ball, basically. You would do these stupid things and you would just bounce off of it. Now I'm like a snow globe. I just shatter, right? And then I spend a number of days putting myself back together. I'm loving the love, by the way, guys. It's great to hear you're doing well, Kelly, and how wonderful everyone's saying hello to one another in the chat. Absolutely, what a bunch of legends. So today, yeah, hangover lasts longer for me. Yeah. I used to get like barely a tickle. Now it's like 3-4 days. But do you know what? Actually, I've just had this ongoing illness recently that I haven't managed to shake. And for the first day today, I feel like, you know, a little bit kind of clearer from it. So maybe the excess of alcohol was a good thing. Well, that's certainly what I'm kidding myself for anyway. So, my wonderful people, what are we looking at today? We are going to dive into our alt request Wednesdays. And really, I don't want to kind of stick on this theme of bias too much, right? I want to know what you guys really want to see. You know, what is it that you're kind of struggling with the most? Yeah. Now, for me personally, I think realistically, a lot of people really don't focus enough on bias, right? Now, what I mean by that is, let me just zoom out on here. I'm just running a session with a mentoring client of mine, and we were looking at this kind of the idea of how we take and we look at bias and how we transfer that bias into kind of actionable setups, and how difficult it can be sometimes to stick with that bias, right? Now, I know a lot of people use market structure for bias and bits and pieces like that. You know that I'm a big fan of taking structure shifts a little bit faster than that. But there's something that really I kind of wanted to just reiterate to you guys today in terms of how I look at the charts. And we can really see just what a kind of choppy mess this has been in and around here, right, to trade. So let's just get rid of this, right? So, yeah, agreed on bias. Building my conviction to take the trade. That's a really, really good statement, GOT, and is absolutely what it's all about. It is about building conviction, right? Now, a lot of people will hesitate to take trades, right? And you get this feeling at some point that basically the trades that you hesitate on end up being the ones that you should have taken that win, and the trades that you don't hesitate on are the ones that end up being losers quite quickly. The losers knock your confidence, stop you getting into the next setup. And what does that do to your statistics, right? People, I think the best way to think of a trading system is like a conveyor belt, right? And I always make these analogies up. I don't know. I think I'm at this age now where basically I remember something and I forget something else, or I learn something and I forget something that I learned. So the analogy might be terrible, but let's run with it, right? You're on a conveyor belt. Now, if you're looking for consistency, right, and let's say, for example, we are producing chocolate bars, right? On that conveyor belt, what you'll notice is this constant thumping noise, right? That's the stamp. That's the chocolate bar getting produced on that production line every single time. Now, after all of those have been produced in exactly the same organized and structured way, right, they pass down the conveyor belt to a quality control function. And that will pick up the odd one where maybe the chocolate bar was slightly askew and the logo didn't print properly, or there's something wrong with the packaging. They'll then be filtered off, right? Now, if you try and put the quality control mechanism before the production line, you're screwed, because you're basically trying to predict what's going to happen rather than acting on what has happened, right? So let me put this into context. When you trade, you need, I don't love this term, but you need a mechanical system that allows you to repeat what you do time and time again, right? Now, that can be something super, super simple, right? Or it can be something quite complex. Typically, you want to favor things that have a little bit more of a simplistic, repeatable approach, right? Now, the problem comes in with that system when you back test it, yeah? When you do the testing and you get to the end of your month and you say to yourself, okay, over a month's worth of data, this system earns me is 5R up, right? Now, you've traded that system on every day on the test, yeah? So every day, let's say, for example, we set our bias, and you know what? I will show you, yeah? So let's look at our 4-hour chart here, right? Now, we're using our FVG system, right? So you see this purple box that's here? Let me just delete this quickly. This purple box here, you see it, hey buddy. This purple box on here, right, represents our inverse fair value gap. When this candle closes above this on a 4-hour scale, yeah, then my immediate target becomes this, right, which is the swing high. So when this candle closes above this, inversing this fair value gap, because at that point it was a bearish fair value gap, we expected price to draw in, reject here, and attack these lows. It didn't, had a strong move and close above. That tells me that price is hungry for liquidity higher up, yeah? So what we were looking to do is when this closes, we step into this session here, we're simply looking to find a trade within here that takes us up to the liquidity above, right? Now, we'll use this as our 4-hour example. Now, let's imagine that our system is this. We need to see this, yeah? We either need to be trading with our bias, or if we flip our bias, as we've done here, we're now looking for the next point of liquidity, right? Now, as we do that, we then need an entry mechanism, all right? That's the next part of the equation here, yeah? So we flipped this here, right? Now what we need to see is quite simply price to do two things. We want to see it run a low, yeah? Then we want to see it break a high. And as it breaks that high, we want to see it leave displacement, right? Which gives us our entry. Now, for the sake of consistency, we're going to say that we always put our stops below the immediate swing low. I always add a couple of extra points, right? And then we know that this is our target here, yeah? The thick red line, which was our liquidity from earlier. So that's our entry mechanism, yeah? So let's run through that again. We've built a really, really simple system here where we are looking to capitalize on what our 4-hour bias is telling us, meaning that when we were back here, you see this 4-hour fair value gap. If we move this back a little bit, we can see we had this bullish fair value gap here, yeah? Now, when this bullish fair value gap appeared, it closed on this candle, we were looking for long setups from here to go higher. So let me make that green, so that's in line with our other one. However, when price carved through this, yeah, see how it did that? It closed below. From that candle on, we are then bearish until when? Until we start taking out these liquidity targets lower down, yeah? So that's the only thing that we're looking at is a 4-hour bias, and then we're going to drop to a 15-minute to execute, right? So with that system, if I test that every day, yeah, and when I'm back testing, the amazing thing when we have the data in front of us is we take that data and we go, I would have taken that entry there. I would have taken this entry here. I would take this entry here. Now, when you step in and you're doing this for real, yeah, there's lots of other factors that start to affect you. There's emotion, there's the idea that you don't want to be wrong, yeah. That is such a huge thing in trading, especially when you look at the crypto Twitter culture, where traders seem to be more interested in being right than they do in being profitable. Now, that's why I will always have so much respect for someone like Bird, right? Now, the amount of abuse that guy comes in from, I just couldn't deal with it. I probably could now, but when I first started, he really used to bug me. Here's a guy that's completely transparent about every single trade he takes. He posts his entry, he posts how much money's in his position, he posts how many when he takes profit, when he moves his stops, when he takes his losses, when he takes his wins. And in the last several years that I've known him, he's been profitable to the sum of multi-millions every single year with a win rate that is lower than 40%. That means at least 6 of every trades that he posts into a public domain where he has millions of followers are wrong. And most people will just chastise him for that with no understanding at all or will to understand that his system is what's making him profitable. He doesn't need to be right more than 4 times in 10. It's all baked into the process, right? So the point I'm trying to make, which really gets back to the excellent point raised by GOT earlier, which is about building conviction, is understanding your data. So after all that waffle, we're short bias from here, we're long bias from here, right? Yeah, that means that every day we step onto the charts here, we're looking for shorts here, we're looking for shorts here, we're looking for shorts here. Paid off quite nicely, right? Now we're still looking for shorts here, but we don't get the opportunity. Look at that strong close, yeah? Now, we can see, as we move to the 15 minute, if we're looking for shorts from this purple box, right, then it doesn't give us the opportunity, right? There's no breakdown within that, yeah? However, as we go on to our previous days, yeah, bearing in mind, remember we've got that short bias now all the way back to where we get our red arrow. All we're looking for every day, and you can align your time zones with this as well, or you can try it without time zones. But as you can see here, we're looking for sweeps of breaks of structure to trade lower, right? Same as we are here. What are we doing? We've come up into this day, we've got a bearish bias, right? We're below here, we're looking for moves higher to trade lower, right? You have some winners, you have some losers. The key thing is, what you can't afford to do is not to trade your system, right? And what I mean by that is if you get a trigger mechanism, yeah, then you really, really should be taking it. Now, there's an old system, an old ICT system called the Silver Bullet, right? I need my Coverlight. Mandatory, myocarditis. Nice name, man. Coverlight. I don't know what Coverlight is, mate, but I might need it, absolutely. But it's a very, very simple system, right? That when you're looking at a specific time of day, you're looking for a liquidity run at that time of day. It comes at 3 o'clock my time, right? Who was it you were talking about? Just it's fine, mate, no problem. As long as people are respectful and not trying to disrupt you, I've got no problem with the odd bit of banter. Excuse me. Gerwin, sorry, mate. Who was that you were talking about who posted their trades? It kind of broke up in the audio. So I mean, it's ICT. So a lot of my methodology comes from the original ICT mentorship many years ago. I was fortunate to be a student of that, which taught me a lot. I learned a lot from Trader SZ, who's someone that I know there's people keep messaging me about SZ saying, oh, there's stuff going on, these shield coins, blah, blah, blah. Look, I don't get involved in that side of things. What I would say is there's very few people in this game that give away more and better free alpha than that guy. And as someone that's, I know him far from well, but I've never seen him shill anything. And I was learning from that guy maybe 6 or 7 years ago. Yarko! It has been a while, mate. It's great to see you back. But sorry, I'm getting off topic again, right? But, Burb. So, Crypto Burb. Let me just pop that in here for you. Yeah, you can find him on Twitter. Make sure he's the guy with over like 600,000 followers. The only reason I say that isn't to name drop. It's for the fact that there's a lot of accounts fake accounts that follow him, right? So, regardless of whether you've got a high time frame system, you've got a low time frame system, few key things here are data, right? Understanding your system over a long period of time. And when you do that, it gives you the conviction to enter the trades. So if I enter a trade and I'm wrong, yeah, then no problem, I'm wrong. It is what it is. If I enter a trade and I'm right, great. overall, my emotion doesn't change too much because I understand that at the end of the month, I have this system. So I wanted to share something with you today. I don't trade this system anymore. I used to trade it, and I saw a chap that got introduced to me on Twitter. And I like giving shout outs to these people because fair play to them for what they do. I don't have any personal connection with him. The guy's called, I think, TT Trades, and seems like a wonderful, wonderful chap who explains ICT principles, a little bit similar to myself. Like I say, no association, but it's just something that I wanted to show you because it's a very good example of a very mechanical trading system that anyone can overlay on anything. Now, this is a little bit more of an equity-based system, but let's take a look at it on an alt and see if it works, yeah? And the reason that I'm really keen to share this is because it gives people something you can go away and that you can test immediately. And this all plays into the idea of building conviction, all right? So let me just make sure I haven't missed anything out watching that play out. Oh, yeah, I know. GOC, just what a nightmare, right? You're welcome, Gerwin. Yeah, definitely go and take out Crypto, but check out Crypto, though. Brilliant. Alex, hello, mate. Welcome. Rave Song Records. Wonderful morning here in Chicago. Well, very good morning to you there, Rave Song Records in Chicago. How wonderful to have you on the stream. So, again, go and check this guy on Twitter, TT Trades. He's posted a brilliant video on this. I used to trade this exact system, and I have been doing so for a while. I don't trade it live anymore. I have a couple of different systems that I trade, but I really, really want to show you guys this because I think it's just such a beautiful system. It reminded me when someone sent it to me what a good thing it is to kind of for something that's so mechanical and so repeatable, doesn't require a daily bias, right? Now, I'm not saying go away and don't trade it anymore. Yeah, so let me just leave that later. I don't think I do. But let's clean this chart up, right? So Nick asks a really good question here, right? Why don't I trade that system anymore? So for me, it's a non-bias based system that's based over an ICT method, what's known as the silver bullet, right? There's 3 silver bullet time periods every day where you get a particular reaction from an interbank trading algorithm. And we're trying to find what's known as the Judas swing, yeah, which is, you know, the fake out, the move in the wrong direction. And then we look to trade it in the opposite direction, trying to catch what is the manipulation move of major accounts looking to chase liquidity, right? What does that all mean if we break that down and I try and explain it a lot clearer than I clearly have? I'm going to go to an hourly chart now. And again, I don't want anyone freaking accusing me of ripping this off. I've used this system for a long time, but I would always say go and find the one that TT Trades has done because this is the video that was shown to me recently that made me start thinking about this system again, right? Now, like I say, transparently, I don't trade this system, yeah? Andre, hey buddy. No, I don't actually. Some brilliant traders out there that do though. Trader Dante, who I was fortunate to learn off many years ago, was a very early exponent of that. He uses it exceptionally well. I think it was Exo charts and a couple of other bits. I'm a bit more of a simple creature than that, unfortunately, mate. But the people that use it exceptionally well. So all I'm going to do here is forget the session indicator at the bottom for the moment, right? Can you be effective if you don't use it? No, sorry, mate. I'm not saying I'm effective with it. I've just seen a lot of test data. So I run a trading team and some of the traders in there use it. And I've seen their test data on it, which is incredibly impressive. It just doesn't really suit my style of trading, nor kind of how I like to set the charts. But I suppose what I should say better is that I've seen it be very, very effective, but I haven't used it myself. So the reason I don't use this system anymore is for me, it made me become a little bit detached from the charts because you don't need a daily bias. I like doing a top down. I like looking where the weekly is delivering. I like looking at the daily. I like decanting that onto the 4 hour and working out where's price delivering from? Where are the inefficiencies? Where are the highs? Where are the lows? Where are the liquidity pools that price can be heading for, right? Hey, MMU Beauty. Always welcoming. Any doors open for you guys. You know that. So before I digress too much, the reason that I'm kind of sharing this is because as I sit there and explain to you, as I just did, look, I'm targeting this fair value gap. I want to see price come to here. I need this liquidity sweep here. It's very hard to get through a lot of data sets in a day to show you if something's effective or not. What I want to give you is a system that you can overlay without using a daily bias, right? And you can just take it at face value for yourself. You can test the data as far back as you want. And it's just ICT's silver bullet method, but with just an extra step put in, right? Now, there's an indicator that I'm going to put on here, which is, it's called Silver Bullet Time Zone ICT, right? Now, all this does is this sets, I've only got 2 of the silver bullets on here. I don't trade the London silver bullet, right? If I was to trade this, I'd be focused most heavily on the New York AM and then the New York PM, which are these 2 lines, yeah? So sorry, let me just catch up on a couple of questions here. Can we say the short-term trend is bearish, daily trend is sideways, and the weekly trend is still bullish? You can absolutely have a multitude of trends. And actually, Alex, remind me in a minute, mate, and I'll go through a quick top-down view and show you how I would look to establish that. But for this particular system, we're not looking for any bias, right? All we're doing is we are looking at, so the silver bullet here, is 3 p.m. to 4 p.m. my time, right? And then this one is 7 to 8 p.m. That's London time, yeah? So if I zoom in, you see this line down the screen, I'm on the hourly chart. Now, I need the candle before this blue box. I want that candle's high, and I want that candle's low, right? And then let me just move that across and get a few of these drawn up, right? So for any of you that want to lock your drawing tools on, you go across to the menu here, see the little pencil with the lock arrow. If you click that and then click on any drawing implement, it will allow you to stay on it. And basically, it just keeps repeating it for you, so you can just keep adding it as you go along, right? Now, what I'm doing here is I'm creating my 1 hour range before the silver bullet move ensues, right? And I'll run through with you what those parameters are in a second. Like I say, this is much more a system that has its history and testing in FX and especially in equities, right? And let me just show you the principle of it, and also the importance of how you can have these systems to just be basically like a binary style test system, all right? Yeah, awesome, Alex, yeah, just remind me, mate, and I will be all over that. So all I've done here, right, all I've done here is just marked the high and low of the candle before this blue box, yeah? Now all I'm going to do, there's 2 ways to do this. People do it on the low time frame chart on the 1 minute, or you can even do it on the 5 minute as well. So let's start by taking a look at the 5 minute. Turn that off, because otherwise we'll be linked to that for the rest of the day. The principle of this is really, really simple. We don't have a daily bias, right? We simply mark the high and the low. Yeah. Now, it has to deliver within our blue box. So that's in this 1 hour period, right? So let me start with this one. Now, the way that you can make this even simpler, which is how I used to do it on here, was you can just wait. See, this here is the high and the low of this hourly candle. Now we're in our blue box. We're just simply range trading this, right? Meaning that we want to see the high swept. If it closes back within on a 5 minute scale, we enter on the close of that candle. Our stops would go above this high, and ultimately we would be chasing down this low, right? In this particular instance, we don't get a good enough risk to reward. We need to see at least a 1.4. However, you can see the principle is there. You can also do this on a 1 minute chart. Right, in which case you're then looking for your structure break. Yeah, so the takeout of this low, you're looking for price to return to this fair value gap. Yeah, and then in this instance, we might get our risk to reward. Let's take a look. We would have entered here, right? So if we take that across to here, we would have needed to be tagged in there. We can go at the origin of the fair value gap. We would still really need to go above that. And even still, no, we do get it there, right? But you've got a wide stop. But you get the principle, yeah? So, yeah, what you're doing is you're creating the range from the hourly candle that precedes the silver bullet move, right? And like I say, TT has done a really excellent video on this recently. I'm just purely using this as a way to show you how you can build consistent data, right? So every single day that this happens, yeah, you can note this down, you can take your entry and what happened, yeah? Was it a winner? Was it a loser? Did you run the high? Did you run the low, right? Now we can see here, I didn't quite cut that one across enough. Yeah, and we can see here that we failed, we came in, we failed to just run that high, but ultimately had we done, we can see how price sells off to the lows, right? So does that make sense? It's just a very, very binary way that you can test the system, right? See this range here? We closed outside of it. We never closed back within with a bullish candle, did we? So we don't go long there, yeah? Again, this being crypto does make it a little bit trickier, I think. If we take this onto an FX pair, right, then I think you'll see, especially with a lot of recency data, but even with this on crypto, I've seen people test this system, right, and test it successfully. Now, the key thing is this is about recording data, right? This isn't about having some magic system that kind of one size fits all, right? It's about having something that you can test on a repetitive nature, yeah, that can give you data. So, as we see here, we unfortunately didn't get the breakdown here within our blue box, right? And we can see a similar situation here where we didn't break and close within. So immediately we can see a system here that some people will look at it and say, you know, and I can see the numbers dropping as we go through this, right? People saying like, this system's rubbish. You've had days and days with no trades. There's no consistency there, blah, 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 blah. But that's the whole point of it. How do you know a system's going to be consistent until you can make it mechanical enough that it can become repetitive? Now, I'm trying to think on what asset class I tested this on recently. I think it might have been NASDAQ. You take a quick look at that. I might have some of these pre-set up so that you can look into it. Now, before we just run in to the second half of our session here, excuse me, which is going to be focused on covering our alts, right, which we'll do our nice top down and bits and pieces like that. The reason that I'm so keen to go over this with you all is because I see a lot of people get to the point they have a really good understanding of the charts and they know what they need to do to execute, but they struggle to make those executions. And the reason is that they just doubt themselves a little bit, right? So if we take our replay mode here, and you see on these, you can see where I've got these drawn up already, yeah? So let's just go back to here, right? And let's just see, maybe these are on the M5 or they might have been M1 entries as well, yeah? Actually, these were taken on the M5, I believe. Yeah, so see this? This was our 1 hour range, right, that precedes this on the 5-minute chart. On the 5-minute chart, we can see here how we ran this low, yeah, and then price expanded to the highs. Now, on the 1-minute chart, which is what we would use to refine an entry, you see we get the sweep of the low here. Let me just get rid of this for a second, right? So what happens? Price sweeps our range low. What do we then need to see? We need to see our shift in structure, which happens here, right? This is our high, yeah? Price breaks through that with what? With displacement, meaning that we need to see a fair value gap that we target. So these principles remain the same. And our entry would actually be here, right? So our entry is the high of this. Our stop loss goes just a few points below the swing low here. And our target is the swing high, right? 1.8R trade, okay? Lovely. So we can see, just by using that hourly candle before, as soon as we get the sweep, we step in and we enter the trade, yeah? Now, what stops us entering the trade here is the fact the price comes down and it doesn't close back within, does it, yeah? So we don't get that deviation or we don't get that market structure break on the lower time frames or that shift, okay? Now, as we move into here, we can see quite clearly again, here's our hourly range, yeah? Marked out by the high and the low of the previous hourly candle. So in the UK time, that's the 2 to 3 p.m. candle, and then the 3 p.m. until 4 p.m. Or sorry, this is the PM, yeah? So we're looking to have the setup, the hourly candle from 6 p.m. till 7, and then execute 7 p.m. till 8, right? Now, if I drag this back to here, right, we can see price develops up, 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 up. What do? We've closed back in the range here. It's actually a bit low, should be below that, a couple of points, right? We have our 1.4. If we were entering on a 5-minute basis, the close of the bullish candle is our entry there. Yeah, you can see that. If you like and are comfortable trading on a 1-minute chart, yeah, then what you would look for here is you would be looking for the structure break here. Price is back within the range. It's taken out this high. Yeah, so price is closed back in the range. We're then looking for this structure to be broken here with displacement, where we get our fair value gap. Right, so we would then look to target the swing low before it, probably actually extend it to this, right? Purely because this is cleaner, right? Intermediate term high there, which isn't as clean. Our entry is here. Why is our entry here? Because this is our fair value gap, right? Our stops go below that low, our target is that high, right? Does that make sense to everyone? Have I kind of gone around the houses too much with that? If I move this back to an hourly now, we can see it's just a really, really simple, non-bias trading system, right? That when we look at it here, let me zoom right in. Our interest is in the high and low of the candle before our silver bullet execution hour, yeah? That candle forms our range. We run the low of that range, we trade it to the high. We run the high of that range within this blue box, we trade it to the low, yeah? Now, we can see here, for example, let's have a look at the last couple. Just to run through. Now, I'm not saying that this necessarily extrapolates itself as well over crypto. It's not as well tested. However, here's an example of a losing trade. This was the hour before, the high and the low. What happened? We ran the low, but we closed back inside. So we go long from the close of that candle, targeting the high. However, we don't get it. Price ran down. There's our loser. Now, this is the important part. This is our AM session trade, right? We've got conviction that price is heading for the highs. It doesn't. We lose. We have two options when we come to our PM session trade. Yeah, we've run the lows again. We can be hesitant, we can question our system, we can not take it, which would be a mistake because we've just cost ourselves a 3R trade, right? We've lost 1R there, we made 3R back here. If you've got doubt when this loses, yeah, and if that doubt stops your conviction to enter here, and you don't get this win as well, your data's going to be all over the place, right? That's why when we did the prop challenge, we stepped in, right? I had a first day, 100% win rate, second day, 100% loss rate. Stepped into the next morning and take the exact same trade setups. And someone said to me, it must be really, really difficult to take that same setup after you saw, so it was 4 losses that I took, by the way. So I took 2 in the AM, 2 in the PM. And I'd won 5 trades the day previous, and funny enough, this following day I won 2 and I lost 2. They said, at what point do you go back, check your data and make sure there's nothing wrong with your system? I said, well, I don't. My data's tested over years and years, right? So I'm always very aware of what you would call evolutionary changes, which means that price dynamics do change and they evolve over time. It makes sense, right? But what I can't afford to do is just panic and go, well, no, I'm not going to trade that system. Well, why not? Right? You know, it either works or it doesn't. So this system, just to give you a little insight, and let me see if I can just share this with you quickly, guys. So, BC silver bullet system. Here we go. Now, let me see. I don't know if this will actually share across, but let me just try very quickly and then we'll move on. So get your alt requests ready, and that's we'll do a little bit of a longer session today as well if anybody needs it. Window, here we go. So this is what I need, isn't it? I need my notes window. So let me share this with you. Right, here we go. So I hope you guys can see this clearly. Let me just stretch it out a little bit. Right, so maximize this beastie. So can you see here, right? Look at all of this, right? You have all of this data. This is on GBP USD, every single trade, every trade taken every single day. Cumulative risk to reward for that month was 8.2R, right? July, every single trade, every single day, this system was traded. Not this exact one, but my system, which isn't a million miles away. 10.4R for July, right? Now, moving on to the NASDAQ, so that you test it on other systems as well, and other equity markets. Now, we can see here that the equity markets were particularly kind, 17.2R, right? Now, What will affect that R every month is my ability to execute, right? Because if I'm hesitant, right, and I don't execute, or I think to myself, I shouldn't take that, or maybe I shouldn't take this, I have to have a set of parameters, right? I have to have that. Hasta la vista, Barbie. Hello, mate. I'm sorry, buddy. I hadn't seen you. I hadn't seen you sneak in there. So let's get back to the chart and let's take a look at these same kind of principles but overlaid, yeah, on with some high time frame bias thrown in. I wanted to show you guys something that you could overlay if you wanted to, so that if you want to get into it, you could just test 2 months. Basically, I think with trading view struggles to go back with the 1 minute data beyond that. You can certainly keep it on the 5 minute data to just show that, okay, there's losses in there, there's wins in there as well, but every single day, yeah, if price runs the high or low of that range, as we can see that it did here, right? I don't know why I've extrapolated those so far across. Hang on. Yeah, same range here. What happened? Price came down, closed back within the range. There's our entry on the 5 minute, or we drop to the 1 minute, trade it to the range high. Yeah, this one. In this particular instance, price deviated the range high, closed back within, we enter here, trade it to the range low. They're obviously not all going to be winners, right? I think this was a particularly productive spell. We didn't have the hourly candle there, we didn't have the hourly run there, right? But just if you want to do something to go and get yourself some consistent data, that's what your system needs to be like, right? It needs to have those binary elements. You need to say to yourself every day, if my trading system meets these parameters, I will execute, okay? Right, so let me just run back through a couple of questions quickly and take a sip of this tea. So BC, is that how you can get more trades in a day to trade with the previous 1 hour and look for a lower high? Yeah, but only within the silver bullet periods, yeah? And you can test it over London as well. There's a London silver bullet. If you get yourself this indicator, anybody that harms and anybody that's interested, it's just called silver bullet time zone, and then in brackets ICT. And when you look at your inputs, it just sets everything up in New York time, right? So it doesn't matter, it's all automatic. And if you put the third one on as well, it puts your London trading time in as well. For me, I wasn't finding London as effective on the typical kind of pairs that I trade, so I left it off. But I would put it on there, and you can just really, really simply just go and crunch a load of data, right? Because you just go onto like an hourly chart, and you wait for your lions, and you just say to yourself, fine, you just go along, put your little lock mechanism on here, the pencil with the lock, get your line out, and then just start marking the candles high and low, right? You can, or even as you look through, you can get a pretty decent idea. You can see this candle's overswept here, we go to the high. This candle here, we didn't sweep the low, we did sweep the high. Maybe that was a loser, maybe we never got tagged in, and then basically just run through and make sure your data sets are consistent. This high, this low, we ran this low, we expand to this high, right? Previous one, low, high, ran the low, probably went lower, would have got stopped out, yeah? Low, high, ran the high, went almost to the low, yeah? So as you're going through, you can do it, but just collate the data, collate what the risk to reward is. Then when you have loads of data, you know over time that the system works, and that's what gives you consistency. That's what gives you conviction to get in and out of the trades. So let's have a look. One coin, altcoin, yeah. Aurora Cannabis, yeah, sure. What's the ticker for that? Hans? Do you know what? I know someone made so much money this year trading cannabis stocks, actually. Is it ACB? I think it's that one, isn't it? I'll ping this one up quickly and we'll have a quick look at it if it is. But if not, mate, do let me know and I'll switch across to the ticker. This one then, mate, is it ACB? Perfect. Okay, so is it obviously the one on NASDAQ as well, mate, but obviously let me know if I'm OP. Yusuf, you love OP, didn't you? Right, let's have a look. Remind me, mate, if I get in there as well. Now, for Alex, who was here earlier, if he's still on the stream, or maybe he's kind of watching this on catch up, I'm going to turn this off now, and we're going to really focus on doing a strong top down, right? So the first thing that I'm going to do here is start with the daily. We can see we've just had this unbelievable rip here. This thing has just gone to the moon. I would imagine there's some kind of legal statute maybe that's gone through. There's potentially some states or countries or something that are looking to legalise this. I know, for example, Germany, for example, a friend of mine who's really, really is an expert in this industry for stocks, was saying that there's a lot of kind of countries looking to pop off the legalisation of this, so it can really, really expand. Now, this, you do always pick a challenging one in your hands. I'll give you that, my brother. Right, so if you've ever got something really, really big like that, then I like to zoom out even further. I'm asking myself here, okay, where are the key liquidity targets? So the way that I look at price action is I'm expecting price to reach for liquidity above an old high or below an old low, yeah? Or to be drawn, that's all right, buddy, it is good to have a challenge, or to be drawn to a fair value gap. So I'm starting here on the weekly, and I'm going to say, here's my buy side liquidity, yeah? I do this in a slightly thicker line. And I mean, you know, our sell side, really, if we're looking at it from that perspective, is here. This isn't allowing for, you know, prior week's high, prior week's low. This is doing it purely on a structure basis of our swing high, swing lows. Where is price moving to, and where is it currently delivering from, right? So on a weekly scale, yeah, price for me is delivering from this order block, right? Meaning that price is currently engaging with this order block, right? Now, we don't know if price is going to overcome that, yeah, or if price is going to get rejected here. But that's what we know at the moment. So now as we decant down onto a daily, we can see that we're starting to get quite a strong rejection from this area, right? Now, on this scale, until we have further confirmation, we have to be bullish, right? We have to be bullish. We've taken out all these highs. We've come up higher, higher low, and now we've smashed this massive higher high. So price for me is either going to be looking to reject here in this order block, or it's going to reach higher for this liquidity. Whilst we're bullish on this scale, we have to remain bullish, yeah? So our daily bias is bullish. We're now decanting that down onto our 4 hour, okay? Now what I'm asking myself is, well, I know that that fair value gap's there. I know that that order block's there, so I'm going to take it off the chart just to clean it up. We know that we're within the order block, so we're looking for a rejection here, or we're looking for a move higher. So I now need to say to myself, okay, well, where can I action this setup, right? If I genuinely believe that this is where price is gravitating towards, yeah, I would also be thinking, okay, well, where could we deliver from? And on a 4 hour scale, yeah, we have this. This is kind of overlaid twofold because we have this gap here, yeah, but we also have this fair value gap here. So I want to make an allowance for that. And then I'm just going to label that up as our H4, all right? A 4 hour fair value gap here. Now, if I expect price to attack this high, yeah, then my ideal scenario here, because we're quite high up in this move, be see price come back down into here, yeah, and I want to see price do something like this, but on a lower time frame, right? Now, why this particular pattern? Because we want to see a low swept, yeah. We want to see the high that swept the low, closed above, and within that, we want to see ideally some kind of secondary fair value gap on a lower time frame that allows us to take an entry attacking the highs, yeah. Now we can keep processing this. Yeah, it's a huge fair value gap on the 4 hour, you're right. And in times like this is where we can bring in our premium discount as well, right? So from the start of this expansion leg higher, we just take a range that's split 50-50. And we want to be favouring longs from the lower 50% and favouring shorts from the upper 50%. So if I'm now looking at this and thinking, okay, well, maybe we get a correction here, yeah, then this is riskier. I can look for confirmations on the lower time frame. Now, the thing is, we might be so strong here, yeah, you know, conviction for this might be so strong that we don't actually draw down into this. But what I need to know is I need to be able to manage my risk, right? I need to have some kind of indication of what price is doing. Now, what you'll notice is in this run up, we set these down candles, yeah, these down close candles, these bearish candles. Now, these are order blocks, right? So the way that I allow for them is I take the top line down to the bottom wick, yeah, in this case. As I draw that across, I want to see this respected. We can see here, price comes into this, pushes higher, right? So we know this is being respected. Price has moved up in a bullish fashion after dipping in, didn't close below the equilibrium, which is another positive sign. Price drives higher. Okay. Now, if we get rid of this one, we say to ourselves, okay, well, where's the next order block? Well, the next order block was here. Yeah. Now what we see is how price kind of driven into this. Yeah. It's created a secondary order block here, right? But it's done so in engaging with this order block as well, right? So we can look at this in two ways. We can look at this as, is price catalyzing a bullish reaction here to attack these highs? Yeah, this high first, then this. Or are we saying, if we wanted to maybe be a bit more risk averse, if we've created this order block here, then if we get an hourly close above this, yeah, so this is our hourly candle here, so we get our close above it, then we can drop down onto an even lower time frame, a more executable time frame, right? Say to ourselves, the fact that price has had an hourly close above an hourly fair value gap, an hourly order block, right? It's important that we align, if we're looking for closes, if we've got a 4-hour order block or a 4-hour fair FVG and we want to see price close above it or violate it, then it's important that we wait for that 4-hour close. It's no good looking at a 4-hour order block and saying, oh, I want a 5-minute close above it. It doesn't work like that. We have to show respect to the time frame that we're on. So what I'm saying is, let's imagine that up here we get this 1-hour close, right? So now we're saying, okay, well, we've had an hourly close above our order block, which means that price is showing strength, yeah? So we would get our conviction from that, and we would say to ourselves, okay, price has done that, price has closed up here. We would look for a pullback towards this again, because we're on an executable time frame. Sweep, close, retrace, target one, and then we would look to target the highs above, right? So can everybody see how we've decanted out? And this is on a very, very tricky chart, right? We're very, very high up. We have to look at managing our risk, yeah? And that's even on a chart like this, that when we zoom out on, you have to forgive the squiggles because they won't exactly look very flattering here. You know, it's just this parabolic chart. We know the high probability setup on the higher time frame is price drawing back down into this area here before it attacks the highs. However, what we're saying to ourselves is if we don't get that, what have we done? We decanted down to a 4-hour, right? We see the same fair value gap sitting here on the 4-hour, right? But now we're saying, okay, well, apart from that, we don't have that conviction yet. Why am I not allowing for this down candle? Because it hasn't closed yet, yeah? We would need to see this candle complete and close to form the order block. So we just keep cycling down through the time frames until we find the suitable level. We've got one here. We saw that that order block was respected. We saw that that order block was currently respected, and we've now made this secondary order block. For me, if I'm looking for confirmation, I then want to see price respect what I'm looking at, because if I just enter blind here, I've got no idea yet if price is repricing in here to move lower or to go higher. If I wait for that hourly close to come above and then move down to this time frame to look for my structure, it at least gives me a good scalp trade intraday to this high. I can move my stop loss to entry, de-risk, and then I can look for it to push higher. All right. So we've got a couple of crypto ones to look at as well, guys. So look, I hope that has, I hope that's been clear, guys. Let me run through it again with you on another one, because I know I can get quite convoluted with these ones. So I want to make sure it's nice and clear for you. Our friend Yusuf here absolutely loves OP. So let's see if we can find some interesting price action on that one as well. Yeah, 100. So yeah, Hans there saying it ran something like 150%. Now, these are normally big news drivers, right, that send these big parabolic moves. So I'd be really interested to see exactly what it was, because to see that, I mean, that was, but, you know, when we zoom out and we look back again, we can also see, right, that we had a big point of compression. Price was going down, compressing. But I still think, you know, when it pops like that, it can be a little bit, not unnatural, but it can be a bit tricky. So this must have been from the last stream when we covered this asset as well, right? We see very, very simply internal liquidity target, external liquidity target. We monitor what happens when we engage with this. Yeah. Once we engage with that, we move to a lower time frame. We take our high time frame level, yeah, we decant down to a lower time frame, in this case the 4 hour, which is where we look for conviction in our setup. Yeah, I think this actually probably played out quite textbook if we look at it. It's back in August, wasn't it? I think. Yeah. So, see the red line that we ran? Now, we're not just going to blindly go short there. We want to wait for the market to give us an indication it's ready to move lower. What does this red arrow mean? It means we're below our inverse fair value gap, right? When this fair value gap formed in purple, before price action carved through it, our expectation was we've run this liquidity. We now want to see price react positively here and we attack the highs, yeah? But it didn't. Price carved through it, and when this candle closed, our fair value gap became an inverse fair value gap, meaning that from this moment this candle was here, our plan was to trade it lower into this. And then all we're doing, remember as we did with the order blocks before, we're taking these order blocks from the lower the candle to there, and then we just want to see this suppressed price. We are bearish here until price, if price had reclaimed this, closed above it, we would have looked for a retest and then for it to attack these highs. Yeah? But we didn't get that, right? Price continued down, stuck with our daily and our high time frame bias, right? And we got that bias because we flipped this fair value gap. It showed us that price had the strength or had the conviction to move lower, and that's what we priced in, right? Then when we had this bearish fair value gap here, we waited for price to draw into it, targeting lower prices. Once again, we're delivering here from a bearish fair value gap, which we're just doing red to signify that it's bearish. Had price closed above this, we would have looked for a retest of it and then prices higher, right? We didn't get that. We got the rejection. It sticks with our bias. We're only looking for shorts, all right? So where does that leave us at the moment? Let's just zoom out quickly to our daily again. Awesome. So price is at a really interesting point here, in my opinion, because when I'm trying to work out bias, I'm looking for what high or low was swept last. Have we taken sell side liquidity? Have we taken buy side? This is a particularly tricky one because we can see here that we've taken liquidity here, right? And also what catalyzed that move higher there, probably this move into it here, yeah? Swept lows has now gone to attack liquidity at the highs. So that's not overly clear. Now, what we're looking for, however, as when this move down happened, where price was delivering from was this fair value gap. This is our bearish fair value gap, right? We can see how that's currently and consistently suppressing price, yeah? So on a daily scale, when this day closes, if this closes above here, yeah, then remember what I said before, yeah? This is a bearish fair value gap now. Once we close above it, we violated it. It becomes an inverse fair value gap. That, on my chart anyway, goes to purple, and I'm now expecting that to act as support. So if we get the close above this on the daily scale, I'm looking for a little pullback into here. And where am I targeting? My first target is always the fair value gap, yeah? So we know this is our draw on price, right? And this is a bearish fair value gap. However, I'm just interested on price drawing into this. So I'm actually on here looking for long setups, yeah? Not at the moment because we don't have the close, right? But if we get that daily close above, all right? So let's remove this quickly. Now let's take this down to the 4 hour and see how we can refine this down a little bit further, yeah? So we're saying we're either facing a rejection here, yeah? Or we're going to get above it and then we're going to start to attack this red box, all right? Where's price currently delivering from on the 4 hour? Well, we can see we had this lovely little reaction here from this bullish fair value gap, which we'll do in green. When you see my charts, if you see my charts on Twitter, etc., my fair value gaps are grey. But I think this gives a nicer visual instruction for people who are maybe slightly newer to it. So am I still looking for highs or am I still looking for lows? Well, on this time scale, I'm aware that we've run this high, yeah? But really, my conviction doesn't change too much here. We've run the high, we're now reacting off of this low. I still need to see a close above here, right? And I also want to see the order blocks respected, yeah? So we can see here now, we've closed this 4-hour order block. Yeah. So what would we do? We would look for this order block to act as support. If we now violate this and we get a 4-hour close below it, the expectation is that price is showing weakness and we would then look to trade that lower. All right. So at the moment with this, for me, we're at a bit of a crossroads. Excuse me. Now we've drawn back down into this. Any more weakness and closing below this order block here, I would see as a point of rejection, and I'd be looking for lower prices. I'd want to see a strong close up and above here, yeah, to hold this. But in the same vein, if we were looking to kind of put our weight in our 4-hour bias rather than our daily, and a daily can be more of a guide, we can decant this down if you're a lower time frame trader, yeah? And we can say to ourselves, okay, well, on the hourly, we can see a couple of things here, right? And one thing I'd like to give me a little bit more conviction is if we get a bearish FVG, in fact, we've had one already. See this little slither of a one here? Right? Let me just get rid of this for you. So, no, actually, we'll leave that there, right? Because that's our OB. Can you see this if I really zoom in? This was our bearish fair value gap, right? We expected rejection. The moment that this closed above here, yeah, our expectation is price is seeking liquidity above this higher. Otherwise, why else would it be showing strength? Yeah? So price closes above this. This now goes from, I know I sound like a broken record, but this now goes from a bearish fair value gap to a bullish, to a inverse fair value gap, meaning that in terms of conviction, how we're looking to trade this, the moment that we get that close above, we're looking for a structure break, yeah, and then we're looking to trade it higher. We would do this on the lower time frames. So if we zoom back again, let's get the exact hour that that candle closed above it. So we were live on this from 10 a.m. this morning. Where are we at 10 a.m.? Here we are. So a different kind of method you can do. I won't go through it in too much detail, but if we look at this, what are we looking for? 10 a.m. is here. Yeah, we have a run lower, taking out liquidity below that low, right? We're then looking for price to break a higher, yeah, with displacement. Now, we don't get displacement in this move. You don't get displacement in the move. When that 5-minute candle closes, you can take a look within the 1-minute structure of that area, right? What you want to see here is you want to see a clean move with conviction, right? And with displacement. What you can see here is if we drag this across here, becomes our kind of pseudo range. Now remember, when you're on the 1-minute chart, or certainly this is how I approach it, I want to see really, really clean structure breaks and really, really clean sweeps. No real clean sweep here, a little bit of internal taken. Where's the first clean sweep? Here, right? Comes down into this inverse fair value gap, takes out these lows. Now we're saying to ourselves, where's the higher? Here's the higher. Do we punch through it with conviction? We absolutely do, yeah? Boom, boom, yeah? You see those candles. You see strong, full-bodied candles that leave a fair value gap. Yeah, so that fair value gap becomes your entry, and then you look to trade this higher, all right? So we'd missed that move today, unfortunately, because that took place in London, but that's how you can do it with a lower time frame bias. I'm replacing my daily bias with a 4-hour bias, and then my 4-hour bias with a 1-hour, yeah? And again, it all comes down to what kind of time frames that you are trading these on. Brilliant information coming in here from Burned, by the way. We've got CPI numbers in less than 30 minutes. Expect some volatility, absolutely, right? Core CPI is what the Fed looks at. They can't do anything on food or energy. Spot on again, my friend. And another little gem here. So look at consumer price index, yeah, for your food and energy. Really good way to keep track of this, guys, is I use a site called Financial Juice. I think it's just, yeah. If you just look that up, and basically it's all free, you just sign up and it gives you all of the calendar news events, and you can filter it by what's known as red folder news. Yeah, that means that in terms of that, you're looking for the key news events that are most likely to impact the market. Whack, my man, what have we got? So, hi mate, do you use the EMAs or MAs at all? Say on the daily to help with your bias for intraday trades. You absolutely can, yeah. Yeah, I'm going to come back to that in a minute, Emin, but you're absolutely right. I've gravitated a lot more towards FX and that, especially at the moment while we're in this kind of low volatility. But yeah, you absolutely can. What I would say is how I used to, use moving averages was I would put a higher time frame moving average on a lower time frame chart, right? Because otherwise I would find that they could be a little bit distracting. So for me, I'm using this system to determine my bias. Let's have a look. I don't think I've got any MAs on there actually. I did used to use I think it was called a triple MA. Yeah, triple MA forecast, right? But what I would suggest, or what I would play about with certainly, is no. What I need to do is get the single moving average up, because then what we can do is I'll show you. I think it's this one. No, not going to let us do it. That 1/3 times a charm. So that was my simple, wasn't it? So here we go. Look in the bloody wrong area. So what you want to do is say you take something like a 21 period moving average. Yeah. So you go for the 21. Your sources close on here, and then when you see time frame, you go on here, and let's say, for example, you want to know what your 4 hour is doing because you want to be in line with a higher time frame. Yeah. So now you see this. Now the advantage of this is when you're below it, you're only looking for short setups, right? When you're above it, you're only looking for longs. So I've just got a 4 hour 21. Obviously test this. I'm not saying go away and do this, right? But look, here's the dealio. We are only going to focus here, on the New York session, which I'll just zoom in a bit so you can see there the blue lines here, And all we do is while we're under this, we are looking for price to break structure, which it doesn't do here, While we're over it, we're looking at it to break structure to the upside. So here we are. We're below the moving average. What have we got here? Right. So beginning of the New York sessions here, what happens? We have a run on liquidity. We love that. Here's our run on liquidity. Here's the low. Yeah. What have you got? There's your displacement in the break of the low. There's your fair value gap. There's your entry. You're tagged in ultimately on the next candle. Stops go above the high. First target I would say would be this immediate low. To our trade. So do we get it on the next one? Let's have a look. What are we doing? Beginning of the New York sessions here. So we're still traveling down. Remember, we want to wait for price to pull back. And then we ideally want to see a sweep. Probably that's equal highs. But if you don't get it, you need to see that move with displacement, right? Do we get it? Yeah, there's our market structure shift. Is that a move with displacement with fair value gaps? Yes, it absolutely is. We want to favor the one that's always in premium, So the highest possible. We're tagged in here. Short position tags us in. Stops have to go above the price. They don't have to, but we said in this method, just a few pips above the price, swing higher, we would then be targeting these lows, right? Ultimately, we get more out of it, right? Next move, what have we got here? Here's our structure break. Do we return to it? No. We've taken internal liquidity at that point, so we have no entry. Next one here. We're in the trading session. We take out this low. Displacements here. That would have been our entry. We would have been targeting this down here. Ultimately, stops would have been above this swing high. We can see we didn't get this one, Now price flicks above. Just show you one long example, not trying to teach you how to suck eggs. Look, New York session, are we breaking structure with displacement? No, we took out this high, but there's no fair value gap. What happens here? Price sweeps a low. Does it break a high? It absolutely does. in this break of the high, do we get displacement? Yeah, you can just see it in here, right? See the little fair value gap that you get here, right? Touch and go whether you would take that or not. You either need to decide in your system whether you take them 100% or whether you want to see a bigger, more powerful move higher. Ultimately, we got that, and we even returned back to it here. Yeah, when we would have probably just got tagged in here, right? Again, today, sweep low, this big move up here, yeah, obviously took out a lot of liquidity, so it's a little bit messy today, but you understand it, right? If you want to overlay a higher time frame moving average, I like using the 4-hour 21 MA, especially on crypto. Then we can see on here. So let's have a look. What was the other one? RN. Yeah, well, it's a good way to keep yourself in tune with the bias, mate. You can see, obviously, the more you get into points of chop, yeah. Key thing is here, you just respect whether you're above or below it, right? And then if you look for those structure breaks, you see you don't quite get one here, it keeps you out of that move higher. Obviously, the more we start to range, which I think we kind of go into this little section here, right? Brilliant, nice short setup there, nice short setup there. We can see when we kind of almost deviate it and close back below, short setup here again. When you get into your areas of consolidation, it can be a little bit choppy sometimes. That's the only thing. Now, I did say I would do one more very quickly, which I think was RNDR for GOT. Here we go, my friend. Take a quick look on this one before we finish up. Wanted to do a bit of a longer session. I felt bad for not being here on Monday. So don't want to leave people hanging. Here we are, RNDR. Again, guys, I've always found that if you've got a good read on a high time frame bias, right, then your execution can be secondary, right? Whether you're using a moving average, whatever you, the key thing is consistency and really, really testing that data. Okay, that's a massive, massive thing. So let's just turn this moving average off for a second. And let's move to our daily, see where we stand. So again, just we can see here that historically, ran these highs. Where's our most logical target? Fill this inefficiency. What happens when we get in here? We then create another inefficiency. We come into this order block. Price ultimately purges lower, right? Once we close below this here, we redeliver from this order block and price sells off, all right? So just looking at, where are we? Looking at current price action, then I think, it's clear to see that we're bullish here on a daily scale. I would have a little bit of caution, as we did with the last chart, because we've swept this high. But ultimately, price was delivering from this bullish fair value gap. A little bit similar to our last one, really, actually. And now these adjoined order blocks here are kind of suppressing price. As we drop it down to the H4, we can get rid of that now, because that's played out. Now, on the H4, I am bearish. And now this all starts to come together here for me a little bit, right? And I'll tell you as to why. First of all, that should have been a bullish fair value gap. We closed below it here. So moving into the end of the New York session yesterday, we would have been looking for short setups, okay? Now, the reason that I like this even more is we've run this high time frame level, so we're expecting a corrective move, all right? Now, what's interesting here is we're kind of rebalancing this bullish fair value gap with a swing low. But while we remain under here, right, I'm feeling more bearish than I am bullish, okay? Reclaim of this and price moving higher. So a 4-hour close above this, I'd be looking for price to retest this and then target immediately this high, look for a reaction here and then look higher. While we remain below this, I'm favoring short setups, all right? So now, as we did on the last chart, I'm going to now move that down to a 1 hour and I'm going to say, okay, well, what helps add into my conviction here is we have just a slither of a fair value gap here, which if we want to remain bullish, then price should respect this bullish fair value gap. Now, today, I'll look at this, and if we get the hourly close below here, yeah, I'll look for pullbacks into this area, and then look to trade it lower. And when we move this onto an executable time frame, what that would look like, right, what we're looking to take place here, only once we get the close below, yeah, is a move like this. Something where you have a move up, you break a low with displacement, we target that fair value gap, and we look to trade it lower, right? That's what I'd be looking for there at the moment. As we can see, the bullish fair value gap on the hourly is catalyzing a bullish reaction as it stands. So while that happened, we're kind of stuck a little bit in no man's land. There's not enough of a trading range there for me to get involved. So as is so much with trading, it's about patience. Yeah. I'll now wait to see if we get a 4-hour close above here. If we do, I'll see that as a sign of strength and expect it to push higher. However, if we get an hourly close below here, because it's in line the fact that we're 4-hour bearish at the moment, right? If we get our 4-hour close below here, then my immediate target becomes these lows. All right, guys. So look, I hope that you have all found that useful. I'm really, I know it's been a bit of a long session today. I'm really sorry if I've missed any of your questions and bits and pieces. It's been really great having you all back on the stream and being back with you all. Next week should be back to normal, so it should be back on Monday and Wednesday as well. So yeah, if you've got any questions about this, please do remember that down in the description at the moment, you can see all kinds of goodies. There's free trials to the nest. There's ways that you can join and get our trading calls, which we're still in between 65 and 70% win rate for this month and for last month, which has just been, you know, astronomically profitable. What I say to everyone, and I know it can seem a bit counterintuitive, but is don't rely on professional trading setups or call setups and that. Use those. What I would suggest to anyone that joins our group is it's a paid group. You can have a free trial, find out if it's for you, see if you fit with the community, right? If you do and you find value in it, then switch to one of the schemes whereby you can get the calls only. You can use the calls, the money that you make on the calls consistently over time to pay for the membership to improve your education. Make sure you're the ones learning this, right? Don't rely on other people to get your trades. You could give a man a fish, or give a lady or a man, you give someone a fish, and it feeds them for a day. Teach them how to fish. It's a lifetime thing, right? I know it's a cheesy old comment, right? But it's very, very true. All right, guys. So look, I'm really sorry if I missed any of your suggestions or comments today. I'll absolutely be back onto it as always. Thank you so much, everyone. It is just an absolute beauty to have you guys all on here. Have a fantastic week. Please do remember, as Bern very kindly made us all aware of earlier, that we do have a very news-driven event today, so do keep an eye on the economic calendar as well. All right, guys, I'm going to see you all in and around the nest, and I will catch you all on Monday.